All right, good afternoon, everyone. Rich Swerbinski with the Mortgage Collaborative. I want to thank everybody for taking some time out of their afternoon or late morning to join us for this week's edition of the Last Week in Mortgage Today. This is, I think, the fourth week we've done this, and it's kind of our every Tuesday at 2 p.m. Eastern, 30-minute whirlwind tour through all the latest and greatest in the mortgage industry. Each week, I'm kind of selecting someone from our lender member network that I know will be an intelligent and engaging co-host for us. And this week, I am joined by Katherine Campbell, the Chief Digital Officer for Assurance Financial out of Baton Rouge, Louisiana. Katherine, thanks for joining me.
Oh, happy to be here. And today I'm actually out of Charlotte, North Carolina, as we grow this office out here, our kind of sub-hub of our branch operations division. So it's exciting to be here too.
That's awesome. You guys are growing like a consumer direct division that's based out there, right?
We are. We were growing a little bit of an operations division out here, and then, lo and behold, became the fast and furious consumer direct division growth. We sort of started it a bit last year, and started to toy with lead generation and how we would do that and what that would look like, particularly in partnership with our branches, right? So we have about 21 branches around 9 or 10 states. And now it's full steam ahead, big commitment to this space for sure. So we are largely growing this out of Charlotte. We do have a small group in Baton Rouge where we started it.
Very cool. My knowledge of the consumer direct division is limited to the last 5.5 years I've been in this role. My past, I was a retail mortgage lending guy, never dabbled in that. But as we've seen members do like sessions at conference where they literally will whiteboard out the whole like financial infrastructure of it, like how much they pay for leads and what they need to convert and what they're paying their salespeople. It's a fascinating side of the business to me. And, what I hear the members say more than anything else is that it's like 2 winters ago when it was dead low, those divisions were losing money. Now it's a great, obviously, channel for lenders. So I know you guys are just getting started with it, but any initial impressions on that side of the business?
Sure. Well, you definitely don't want to dive in and guess. When I say we were sort of, investigating and understanding it, it's mostly for this particular company. I've been in technology for 20 years. So the most exciting space to be in today is mortgage, bar none, because we're not wondering if consumers will do this, right? We're not wondering if this is going to transition online or translate online as a viable way of doing business. When we were, started 20 years ago, I was in San Francisco for 20 years. So I was with many different startups, and I gained a lot of funding and lost a lot of funding. Because it's very expensive to move the market, to say, hey, we have this new idea and we want you to change your behavior. We want you to wake up in the morning and want to log on to this thing we're going to call social media Facebook, right? That is very expensive. That is not for the faint of heart to move the market. Well, we know that we've moved the market online across almost every other industry, right? And so we're not wondering if the market's willing to come with us in mortgage too. So there are, probably 10 years ago or so, were the first lead generation conferences where that was, LeadCon and, these sorts of things that those were very new. Like, we're doing all this lead generation online. Let's start talking about, collaboratively how we do that. That's a good user experience as well. Not just a bottom line ROI on all of this, expensive spend online. So, I did this for the life insurance market. And it was funny because when I started with that particular company, they said, look, we really don't know what to do. So this would have been maybe 2007. We really don't know what to do, but we seem to be getting these leads online, and we don't know exactly how we're getting them or how to get more of them, or if even people would want to come online, particularly think about life insurance or a mortgage, right? These are not frequently purchased products. And life insurance, my goodness, is the most selfless thing you'd ever do in your life. You go through blood tests and you have a nurse visit and all this stuff, and you have to get on a scale, and you benefit zero, right? You're the only person that doesn't benefit from all this work. And so it's so personal. It's about your children and your family. It's so personal that there's no way anyone would really go online, but we are willing to give you a little bit of money. And, we don't understand what you do, but if you want to come in here and try to generate some leads, we'll give you some money and give you a position to do that. And that was my first client side, I had been on the agency side a little bit, but the first client side job I had. And needless to say, in the first 6 months, I tripled their marketing budget. More than tripled their company, their 23-year-old company, in 2 years. And it was exciting to the pace of the market adoption of this was just gigantic. And so that's exactly what's happening here. We're not wondering if people will come. We're just wondering how to do it correctly. If you have zero experience in this, so if you think of it this way, Rich, that there's really sort of a three-phased approach to getting a truly digital process in an industry. You would have selection, integration, and adoption. All right. So if you think that our industry today, we'd like to think with as much money, how many millions of dollars we have. Lots of our fintech partners are $50 million in, $100 million in, $150 million in, to Series C, D, E, and even rounds of, Series F. That we largely are looking at adoption, or we're largely looking at integration, right? We're not so much, worried about selection. Those people that are just in selection are struggling, I would think, with this. I like to think that Assurance Financial, we're real leaders in this, since I came on board a couple of years ago, and that was the mission, that we're more into the adoption phase. And so that's just getting everybody actually trained, up and running, and going deeper into the technology versus just sending out a link and saying, apply with me, and then I'm going to figure it all out later.
Awesome. Yeah, and your background is fascinating. It's the reason I wanted to have you on for this episode, just on this show and other interaction with our members. I think one of the things we've collectively heard from the members is everybody was waist or neck deep in emerging tech and other emerging initiatives this February and March, pre-corona madness. This world of uncertainty from their two, and then now just so busy, nobody can think, function on anything other than closing loans. So very, very interested in getting your take on what the emerging tech space, what the role of a chief digital officer has looked and felt like for these last 6 months. But first, I'm going to put you through some agony of going through some of the stuff in the news this last week real quick, though. We'll get to the fun stuff in a second here. So the big news, obviously, everybody's been talking about is the whole 50 basis point FHFA fee, which threw the entire industry up into arms and rallied us all together. And then we got the news. It was right after this show last week that they were delaying it until December 1st. So your capital markets guy or gal had to be elated, right?
I think we all were pretty elated, no doubt about it. So, we are 100% customer centric. I think a lot of people are handling this the way we handled it, and that we understood it was going to be a big hit to us. We weren't passing those fees off, or the pain of that, to anyone else. And then when we got it back, we gave it back, or in the process of giving it back. But it is, a sign of the times. And I think that, the Action Alliance that the NBA put together, and how quickly they can respond to that. And, it's very simple to engage in the issues that are going on, was just a phenomenal way to quickly get back and say, we have a voice in this. So it was nice to see that they made the right decision.
Yeah, and the other thing that's been interesting about this whole thing was, I think, NBA's statement after the fee was delayed. It really encouraged and implored lenders to do what Assurance is doing, what you just talked about, like giving the loans that were locked during that period where you were able to charge that fee up front, giving that back, eighth and rate or half a point. It's created, at least from what I've seen, a real moral dilemma for lenders. Realistically, from a regulatory standpoint, I think it'd be a challenge for any regulator to go back and audit everything. And, hey, you didn't give every borrower back this half point that technically you may have to have had done. I think, some other lenders looking at it like, hey, we ate this fee on 100 million in locks. So I'm not really super eager to go give it back on the last 20 million that came in. But, And it's been, I'm assuming that many of our members that aren't giving it back aren't telling me about it, but I'm just assuming that's what's happening in the industry. But it's created this weird moral dilemma.
Well, and that's where, you can't really judge because everybody in the last couple of years have been in very different positions. Certainly the adoption of technology was no inexpensive, venture and investment back into the company. And then 2018 was a very difficult year. And though 2019 was a great year to make up for that, if all you were doing was just breaking even or getting slightly ahead of the debt you may have incurred in 2018, this could be a great out, right? And it just might be somebody's scapegoat to survival. So we fortunately have never been in such a position. And like I said, we are absolutely customer centric, but that doesn't mean that we, let's just say I could not understand if somebody, needed to make that up right now.
Yeah. And I always forget to mention this at the beginning of this. Obviously, like with anything we do on TMC Connect here, want interactivity. So anybody that has any questions, comments, please feel free to drop it in the chat. And if anybody has a question for Catherine or myself, please don't hesitate to do so as we go through things here. So moving on, the other new. Oh, I'm sorry, Catherine.
I was saying, just please. It's 30
please,
minutes.
yeah,
Make it bring let us know what you want to know.
I'm not going to make you talk about operational issues. Don't worry.
Good.
The other news this week that really caught my eye was just we had new and existing home sale data that came out last week, but then as people start to dig deeper into those reports, into those numbers, some interesting but not surprising trends. One, I think overall, like year over year, home sales nationally, like up 10%, which is great. A little bit of that delayed spring buying season that we really didn't get in March and April. Great rate climate as well. But the big trend that was really eye-opening was large homes defined by 3,000 to 5,000 square feet up over, I think it was like 21% year over year. And then, if you look square homes and low 1,500, much more muted growth, but people are buying homes. It seems larger homes. It seems like that has a lot to do with just, people people have been home for the last 6 months. People are working from home. I think a lot of people anticipate they will continue to work from home. So people are viewing their home differently and they're viewing their home as their office. So large homes, really huge trends in terms of the numbers there. So
it's exciting to see. I would not wish this year on anyone, even those in our industry that are most fortunate from a financial perspective to monetarily gain out of the deal. I mean, I still would not wish it on anyone. I think it's just a very, very trying time in our country. At the same time, there was almost this inevitable shift that needed to happen. And in a sort of dated approach to transactions like mortgage was, we tended to, even the youngest of CEOs, have a dated approach to the work environment. And so it was, for this industry at least, this massive shift to say, okay, it's no longer a should we have remote processors, it's that we must have remote processors. How do we manage that? How do we keep a culture within that? First, how do we just logistically get to the other side of that, right? That was I decided or was allowed to, because I wanted to take over IT, because that's one thing about a digital officer. You can only get so far with your technology if you're sort of begging your IT guy, if you don't mind, right? So it made more sense to wrap all things digital under one umbrella. And so in January that happened for our company, and it was like, oh, I just had to have IT. I just had to do this, because come March, that poor guy and I, it was a tough time. But once we logistically got to the other side of it, what do we realize? That we're busier than we've ever been, and we were capable of meeting those demands. Now, of course, we were hiring and, just like everyone else, outsourcing and trying to ramp up in every way possible. But the core group that we had was outperforming any level of efficiency that they had ever performed. And so it proved to us, wow, we not only can do this, we can do this with the people that we had. And so now the next evolution becomes that, how do I keep a culture around this? Or what is the new culture around this? And what does that look like? So it is natural that with people being home, for example, I'm in Charlotte this week. I know you know Scott Alexander well, our director of operations. He is also in Charlotte this week because we're sort of redesigning how we look at sales and operations for the consumer direct model, obviously, right? So I asked him last night, I said, hey, where do you stay when you come into town? He said, oh, I stay at the Renaissance, right down the street. And I said, I heard hotels are like terrible right now. No ice, the restaurants are closed, no room service. He's like, exactly. He goes, but you know what? I leave here at 7 or 8 at night and I'm there at 6, 7 in the morning. So I just use it to sleep and eat and that's it, right? Well, I always come into Charlotte and stay at an Airbnb. I want the nice granite kitchen countertops. I want a big coffee pot, not a little coffee pot. I want, to have a 1-bedroom separated from where I read at night in the living room. Like I need to have a little space. If I'm going to be here a week or two, I was actually here the entire month of July. I want space. So it's funny, how people are feeling that way, even about obviously their own space. Do you feel like you just eat and sleep there, then it's no big deal? I could stay in this tiny apartment in New York, right? Because New Yorkers work all the time. But now as they're working from home, they're off to Pennsylvania, right? So they're not just moving 20 miles down the street, they're moving, states away. And I think that is just going to be a trend that continues as the employers recognize our employees can be wherever they'd like to be.
Absolutely. Yeah, I've seen a lot of pieces written just, cities like San Francisco that are really high cost because the jobs pay better out there, but how that could all change because, if those same tech companies in San Francisco can hire people living in Cleveland or Charlotte for $80,000 a year instead of $200,000, how that could change that whole dynamic. And that's one of the other trends I saw from the home sale news was just people are moving out of cities. At least if you look at the stats on home sales, urban is by far the lowest growth. Suburban is very solid growth. And then rural actually was up something like 13% year over year. So another trend that we're seeing. So
what's cool too about that, particularly coming from the coast, as the coast moves inland, is that you have this really, dense area of technology knowledge, right? And this is not, it's obviously learnable and trainable. That's how we all became knowledgeable in it. But it's a real time. You can't just go to college and come out knowing this stuff, right? It's a true application, development and in coding and integrations, and those things come from real experience. So it was hard even for someone like Assurance Financial based in Baton Rouge, Louisiana, to find someone who was technically skilled, right? So that's why, technology in mortgage in general is so new because, only the coast had those skill sets to be able to offer that sort of offering. But I think that, nationwide is certainly this industry and other industries move out of the coast. You're going to start to flatten the skill set and capabilities in different companies across the country. And that's exciting too.
Some very interesting trends, I think, that are going to emerge from, everything that's happened this year. So I mean, interesting to see how it affects our industry, the broader economy as a whole. And, I do think there'll be some good things that come of this. So, well, we had a question come in, and again, I'll reiterate, anybody has any questions, anything digital technology, Katherine is Chief Digital Officer, very vast technology background. And the first question to come in is, Katherine, I hope I'm asking this correctly. Can you speak to the change that Apple is making to its privacy policies that has Facebook and the other social media giants worked up?
I don't want to get far into that. I can say that privacy in general, let's do that, is that if you look at the ability that DuckDuckGo and, obviously where Apple is headed and Brave browser and then the new cryptocurrencies like BAT and how we're starting to engage users across the board, then it is further becoming a market, right? So consumers win. That's the bottom line. And that's certainly what we're seeing today in our space, is that we can say we want to do a digital mortgage. Here's this cool way. Here's this efficient way that if we use these tools, we might get to the other side of secondary faster and save some money on wholesale lines and all these efficient ways. But when the market says, I don't really understand all that and I don't care. I just want it fast and I want it online and I want it when I'm ready to apply. Then we move, right? Then it's no longer about if we want to or not. We then have to because that's where the market is. So this is very much where we are with privacy. People are understanding more and more what their rights and opportunities are. And certainly we understand with all of these listening devices in our home, right? The series of the world, and that we can start to kind of think about, particularly as we're in our home so much more and on our own devices, right? So much more. We're not just on our work devices, that privacy becomes a little bit different and a little bit of a nuance about how we want to handle that. And as they come out with better tools, you look at California getting extraordinarily strict, and in New York following, certainly Illinois behind that it's the more awareness people have, and then the more capabilities they have, privacy becomes possible, and then we better figure out a way to follow suit with the need.
Thank you. And pivoting a little bit to our industry, I'm certainly no cybersecurity expert, but I mean, one of the things just, my common sense had is all of these employees in the mortgage industry, hundreds of thousands nationally, all working from home now. Clearly all mortgage lenders are dealing with customers' non-public private information, that there has to be, I've talked with members of ours about this, and I think most of them are kind of saying, yeah, I acknowledge there's additional cybersecurity risk in how we're structured now, especially since we had to do it overnight. Most lenders haven't really had the time to dig too deep into it, but what is your sense of the, additional cybersecurity risks our industry faces as a result of everybody being shushed to the home office overnight in mid-March?
Yeah, so a couple of things there. First of all, it's nice to think that, if you're home, you're the only one on your device, right? That's a nice idea. But we all know that there's an 8-year-old that's like, oh, I want to look this thing up, and mom's computer is right here, right? She's working at the kitchen island and she's cooking supper and they hop on the computer. So there are many ways that we are affected, internally. And so internally being our own families, or, hey, can you please go to my desk for me because I can't get into the office until next week, and I really need you to log into my computer that's there, and here's my password, right? So you have these internal challenges, and then you have the external challenges, right? You have people actually looking to break that security and create a great risk for you. And you can look at it as a couple of different ways. Either you start to look at how do we get everybody to VPN and be on these super secure entries into our current network, or how do we put this whole network in the cloud and make sure the only interface they have is hosted by our secure environment. And so what we want to make sure is that if we move to something like a BYOD, which is bring your own device, right? One of my favorite sort of concepts, and something I was looking at before this, now it's of course a really critical thing. If everything we're doing is online, right? If you go, we use Blend as our point of sale system. If you're sending the link to Blend online and you're using the Blend LO app to go in and manage your pipeline, and then what are you needing a device from us for to do that? In this day and age, everyone at a bare minimum has an iPad and a smartphone. Likely they have at least a desktop at home, if not 4 laptops laying around, right? So if everything we're hosting becomes a secure environment, and you can do things like remote desktops and remote into your services, then it just makes a lot more sense that we not have both the expense of the hardware piece or the obligation to it. But what you do want to make sure, if you choose, to actually support hardware and give that to everyone, then that there is a secure environment, firewalls involved, and maybe not just using their own ISPs for access.
Thank you. We've got about 5 minutes left. If anybody has any additional questions or topics that they want brought up, please feel free to voice those electronically in the chat or the Q&A. But a couple things I wanted to hit on you with, Katherine. One is just the Chief Digital Officer role. I think talking about emerging trends in the mortgage industry, positions that exist today with a lot of lenders that did not exist 2 years ago, 3 years ago, 5 years ago. One is the chief digital officer role that you hold for Assurance. Chief diversity officer is another one we're seeing lenders trying to figure out, how to structure that, what that role is responsible for, how to find a good person for that role. But what is, I guess, tell us about I guess, forget the last 6 months, the normal day-to-day of a chief digital officer, what you're tasked with at Assurance.
Sure. And, it's probably very varying by company. I think the biggest piece is A, to create the role, and then B, to make sure that the role is created for someone who has a technology background versus saying, hey, you are our Encompass administrator, so you go be all things digital, right? Because, it's one thing to say, okay, I'll call Encompass and I'll call Blend, and then I'll be on the phone while you two figure out how to integrate, right? Versus understand the integration points that are critical that also trigger your marketing automation communications. So for us, how we even came to this position, I was the technology manager coming in to just sort of release an application at a time, making sure that adoption, was available, regular training and that sort of thing. And then what happens, probably like most companies, is let's say operations in a mortgage company says, I need a strong loan operating system. And compliance says, I need a social media monitoring platform. And marketing says, I need a marketing operating system for marketing automation, right? So everybody's off in a vacuum. Of course, sales wants a strong point of sale system to be competitive. Everyone's in their own, silo, getting technology without understanding A, how they integrate, and if these partners are even working together already in some of their integrations, and B, what their full capabilities are. Because going to Optimal Blue and working with their co-mergence and understanding how their social media monitoring works versus Social Survey, who is our ratings and reviews technology, how their social media monitoring works, those teams may not even know that both of those tools have that capability. So it's very important that all technology, I think, roll up to one person, not that the day-to-day use of how you use or manage your people to that technology inputs, let's say, is necessarily overseen, but having a strong understanding of the contracts and the capabilities of these technologies, and then understanding where they make sense, even in the review session, of where the integration points are available, what APIs they have. And for us, just to fully answer your question, I run marketing, which today is a lot of MarTech, right? A lot of marketing technology, IT, and the consumer direct division, which is a lot of technology all the way from the front end of digital marketing, which is generating the lead base into this group. So that's how we made it work.
Interesting. And then I know Assurance has been out in front of the emerging tech space. I remember when we met, it was a few years ago, just randomly, we're at, I think it was the Digital Mortgage Conference in Vegas. We just happened to be at the same lunch table, did not know each other at that point. I think you were sitting next to Kevin Conlon, who's a mutual friend of ours.
Good memory, yes.
Yeah, but you were talking about things you were doing then that lenders are doing now. So I know you guys have been, and that's obviously why Assurance brought you on board, but wanted to address with you the thing we're hearing from our members that is just, I think all lenders are immersed in some sort of research, development, implementation of new technology on some level. And the one thing we've heard from members as a pain point in these last 6 months is it's just been too busy. Like this is stuck in, on the sideline or in the penalty box. And yet, it's space that you can't really afford to take too big of a break because you risk being, passed up by your competitors. So what would you say to the lenders out there that, have been on pause with initiatives related to emerging technology and,
That's a great question. So if you think of 2 years ago, then I think that was the year you and I met. There were like 20 vendors and maybe 1,500 people at that digital mortgage conference. Last year, there were over 60 vendors and over 5,000 people at that digital mortgage conference. And at each of those years, they had people get up and do a demo of their technology. And in the first year, it was like, this is what we're going to build, and this is what will be capable one day, and it's going to be so amazing. And it turned from that to last year being, we built it, we did it, we have adoption from this many clients, and this is our development path from here. When you see that gap, and that's what technology can do, is it is, you know, exponentially fast for a market that was already to, you know, ready to make it digital anyway. Then you see the market go, the gap in the haves and the have-nots just in the technology in a year were so tremendous, you can believe that that's going to be what happens with the lenders, is the have and the have-nots. And though we are sort of tasked with the, not only the consequence of the expense of the technology, but the consequence of rolling it out not only to our internal teams and the sales teams, but also when we look at Ron and everything that's happening in the closing world, having to transition the title companies and closing companies, we are sort of tasked with having to do all of it. And so it is very overwhelming, to say the least. But the partners are great. The technology companies are prepared for this. They are ramping up in an effort to help everybody with this. And the gap between the haves and the have-nots is going to grow very, very fast. So that's what I would say, is there's just not an option but to dive in.
Pausing your efforts, not an option. You'll end up behind the pack, and that makes a lot of sense. And appreciate all your wisdom on all things emerging tech and digital initiatives, and in general, just appreciate your constant willingness to step up and lead sessions for us and be a subject matter expert for us as part of TMC.
Good deal. Thank you. I appreciate it. Great to see you.
Awesome. And to all of the attendees, thank you for taking a half hour out of your Tuesday afternoon or late morning with us. We'll be back here, same place, same time next week, and we will be delivering a copy of this video to our network, as we always do, electronically. So, Katherine, thank you very much. Have a great rest of the week, and hope to see you in person sometime soon.
Me too. Back at you. Take care.
Bye,
Appreciate it.
Katherine.
Bye.
Take care, everyone.